It's not every day that you see one major story become the top headline across pretty much every major media financial outlet. And that's arguably what you're seeing today. You see it with CNBC. Once again, Russia invasion of Ukraine. Putin orders forces into rebel eastern Ukrainian regions after recognizing their independence. You see what's the response from the U.S. and Europe, where Biden orders sanctions on separatist regions of Ukraine. EU vows additional measures. You see a price spike with oil. You see prices decline with the stock market due to the uncertainty. You see a bid up in U.S. 10-year treasuries where the yield has gone from 2% to 1.85%. And once again, this major news story is played out across all the major outlets. You see it with the Wall Street Journal repeating much of the same story, as well as Bloomberg. And so this does, make folks ask themselves like, well, wait a second, how does this impact me? How should I think about it? And what do I do from here, especially as I'm watching, the stock market potentially dropping significantly, futures down 2 to 3%. So they're asking, well, what do I do from here? And so we're going to talk about that and more. And if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. And in full disclosure, this is not financial advice. So I think as you look at something like this, I'm not going to get into the nitty-gritty of the geopolitical situation with Russia, Ukraine, the history there, because that's not in my circle of competence. But I think periods of great uncertainty like this are really healthy because it's sort of like a gut check to force yourself to ask who you are. What type of journey do you want to be on? It forces you to ask those types of questions. What type of game are you playing? What is the time frame of your expected investments? And as you start considering questions like this, and keep in mind, I'm not making any recommendations for what's right for your journey. I think any given perspective should be studied, and you should consider what's generally the base case and what is the general probabilities. For example, a lot of day traders lose money, whereas generally, if you focus on long-term perspective, the payoff is generally not a zero-sum game. And so that's why I'm more of a long-term focused investor. But look, everyone has to figure out their own journey, what type of game they want to play. And so if you're, let's say, playing the trading game, you're playing the short-term game, let's say swing trade, short-term day trader, that's like an extremely different game than what you're doing if you're a long-term investor. If you're a short-term trader, you might be thinking, oh, oil price is going up. Oh, what's this going to do? You might be thinking, oh, this might be actually an opportunity to, buy or sell treasuries because maybe this is an overreaction. That is a very different game. And I'd argue the mindset there, what you're looking at is sort of like buying yellow, slightly brownish bananas, because the information that you're considering with trading is generally, it expires fairly quickly. Whereas with long-term investing, you're looking for long-term actionable insights that can last for months or years or even decades into the future, where you just know some key aspects of a business and you say, regardless of what's going on in the world, the geopolitical events, do these fundamental secrets of this business stay true? Do these fundamental principles of this business stay true, these investments? And so that's the two different perspectives. Are you constantly shopping for that yellow banana that hasn't overripened and you're like, oh, it's still actionable perspective? Or are you looking for something that might be true for decades and decades? And so that's the two different games that you're looking to play. And so for, let's say, the long-term perspective, those questions that you want to be considering are things like, what's the value proposition of this business? What is it that they're bringing to the marketplace? Are they unrivaled? That's the basis of this channel, Unrivaled Investing. And so when you see a headline like this, most of the time, if you're focusing on that long-term perspective, it probably, for many companies, it probably doesn't impact that core value proposition, unless it's like, hey, this is a business that's selling a lot into Russia or Eastern Ukraine, or it has a workforce that's heavily in Eastern Ukraine and Russia. So like most of the time, these types of major headlines that shake the capital markets, oh my goodness, the market's down 2 to 3%, doesn't impact the core value proposition for many businesses. And like other core questions that investors need to think, okay, what's the growth prospects for this business? For a lot of businesses, you're like, well, wait a second, is Russia really that big of a market that I'm investing in? Like, is this the market that I'm capitalizing on for the future? And if Russia is arguably not a big component of that future growth, and you say, well, wait a second, why is it impacting the fundamental value of this business. Same thing with margins. Margins get a little trickier, when you start thinking about a business, because margins means profitability. What's the end state profitability? For a lot of software companies, they largely won't be impacted by the margin aspect of, let's say, an oil price spike. But you can have aspects of, hey, if oil goes structurally higher, let's say over the next few years, because of this, you could have a lot of industrial companies take a hit, a lot of more cyclical companies potentially take a hit. But once again, that forces you to ask yourself, what's the time frame for my investment? Do I think that, let's say, over 3 to 5 years, this will boil over and that really won't be a concern? Potentially higher oil prices. Yeah, maybe even oil prices spike, go from 100 to 200 and really shakes the economy. But do you think that there'd be a normal course correction with a commodity type market like oil, where all of a sudden you'd see a huge swing into production and eventually it sort of even out? Because regularly, if you see a spike in a commodity, you're going to impact the demand, because all of a sudden, hey, you can't afford it. So you do have this, and you're going to also see an impact to supply as well. So you see aspects like that. I'm not saying that oil can't spike from here. It certainly can. And maybe I'll have Nelson, back on again, just because he always does it great. And he's had a great call on higher oil prices. Check out those videos on higher oil prices that I've done with Nelson at Open Square if you're interested. And so, periods like this are really helpful just to sort of say, what game am I playing? And does this event change the journey that I'm on? Does this change the game I want to play? And for me personally, I see this and I'm like, it's really not impacting the game that I'm looking to play. I recognize the increased volatility, but the long-term things that I'm focused on, like, does this company still have a strong value proposition? Does this company still have a very attractive growth runway? Does this company still have potentially much higher margins or attractive, free cash flow? You look at those different things, and most of the time, for at least for me personally, I'm looking at this and I'm saying, this is a major headline that's scaring everybody, but this headline really doesn't impact the core fundamentals for some of these businesses for a long-term perspective. So then the next aspect is like, okay, that probably helps you out when you think about, like, what game am I playing? Because then the next question is like, well, should I panic sell? Or maybe this is a buying opportunity because other people are panic selling. And so you start asking questions like that. I think it's definitely the right instinct to say, hey, is this potentially a bargain hunting opportunity? Whenever you see something sort of sell off 2-3% in response to a geopolitical event. And so you look at this and sort of say, okay, should you panic sell? You shouldn't panic sell. You shouldn't panic buy. You should never panic, period. You should always aim for that Spock-like logic, in my opinion, where you're sort of saying, what's the fundamental value of a business? And, looking at this, say, hey, is this worth buying based on what do I think this business can do in sales, in profits, and what is the implied valuation when I look at that? And so at the end of the day, a lot of people think like, oh my goodness, the stock's down. Maybe I'll sell it if it gets all the way down to here, or maybe I'll sell it when it gets up to there. You should never, in my opinion, looking at the stock price to judge your actions on individual stocks really doesn't make a lot of sense, because at the end of the day, the stock market doesn't care about you. The stock market doesn't care what you think in terms of, oh, at this price, you're going to be a seller. Oh, okay, at this price, you're going to be a buyer. Market doesn't care. So what you should be focused on is, well, wait a second, what's the fundamental value of this business? Is it getting stronger or is it deteriorating? And that way, each quarter, you can check on things that you can actually measure versus this sort of emotional arrangement. Oh, it's down, and now I feel bad, and now I want to sell. So I would argue, looking at this, you should focus on really one core question, which is, I've talked about, is this company unrivaled, and, margins and that type of stuff. But the core question that you should be considering as you look at this is, what does this business look like in 5, maybe 10 years from now? And if you focus on that as a long-term investor, then it's a very different reaction when you see major headlines. It's like, all right, that's fine. I'm cool with that. I'm not getting worked up. Oh, the stock price is going down. Oh, the stock price is going up. I'd argue you get greater equanimity when you're focusing on the, let's say, quarterly or annual updates for a business, saying, okay, how's this business doing? How is it fundamentally performing? Now, keep in mind, that's just for an investor. looking for a long-term investing game. If you're playing the day trading game or short-term game, yeah, you should be emotional or you could be you should never get emotional. But I could understand why you'd get emotional because you have all this news coming at you, all this banana's ripening too fast. And that's such a completely different game. It's so much harder. So many things are outside of your control. Whereas I'd argue focusing on that longer term perspective, it's easier to track, okay, these data points. Okay, here this quarter, this company's growing at 50%. That's a slowdown from 80%, but I still think they're taking market share. Yeah, what's the valuation? And you just look at the market price as sort of a opportunity. Oh, okay, is this an opportunity to buy more? No. Is this an opportunity to sell because I think it's crazy expensive? No. Then don't do anything. So you just sort of sit tight. Trading, oh my goodness, now I'm going to sell a little bit, now I'm going to buy a little bit. So that's the different perspective that I have on major news headlines like this. If this video has been helpful for you, talking about the major geopolitical event with Russia invading Ukraine and what does that potentially mean for you as an investor or as a trader, I hope this video has been helpful for you. If it has, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.